Okay, we are live with Marianne Beatty and David Cockett and Erika Spencer. And I'm Tom Karadza. Nick, my brother, is not here. Everyone's looking at each other because we have a brand new setup here. This is the first time we're using this setup with the brand new cameras, and nobody knows how to act, I can tell. Erika, you're just looking straight for me. Hey, so the idea here was that you guys, I can't remember how you crossed paths with Erika. I think you saw a TV show with Irwin on it. Is that how it went?
Yeah.
You saw Irwin, and then that started your real estate journey?
We came to a class, and we saw Erika present, and I said to Dave, she's our girl. She's our girl.
And I said, I'm down with that.
Yeah. What was it about Erika?
She just spoke well, and she was into St Catharines before everyone else was.
So tell us about that, Erika. I don't know if you talked them into St Catharines, because you guys live in Toronto, and I feel like you've been thinking about real estate for, like everybody, multiple decades.
Forever.
So what was that transition from thinking about real estate, living into Toronto, and then being introduced to St Catharines through Erika? What was the mental shift there?
I think that Hamilton was priced beyond what we were comfortable with. And St. Catharines has a good storyline. I mean, they've got the GO train system was going to be going in, and it's a lovely little community. So St. Catharines it was.
Erika, when you talk to people at St. Catharines who are from Toronto, anything I can't speak, I'm still on vacation. Does anything come up repeatedly, like that you're always explaining about St. Catharines that people don't know? Or is it different depending on the investor?
I think the number one question is jobs, what people do in St. Catharines, what the major industries are, what our tenants would be, what the profile would be. And I think once they get past that question, then it's an easy convince, because it's cash flowing. The prices are way lower coming out of Toronto to Niagara region. Hamilton, again, at the same time, look what Dave said, was so much more expensive than St. Catharines. So it was a kind of an easy, like, okay, A or B, let's go with B.
So let's back up a little bit here. You thought about real estate when one of your children was going to go to university.
Oh, yeah.
So why did you have that thought? Why did you not do anything then? What year was that?
It would be almost
He's
20 years
trying
ago.
to age us. Don't answer that question.
Yeah.
It's like 18 years ago.
So 18 years ago, and you decided not to buy a student rental?
We just didn't have the infrastructure to push us over the line.
And I think when we spoke to our friends, everyone was all, no, what if your next daughter doesn't go to the same school? What about this? What about that?
And as it turned out, that same daughter went to McMaster for 12 years.
Oh, really?
Yeah.
Got it. So has there been a mind shift, do you think, in your friends and family? Because it sounds like, if I'm reading, between the lines here, you were nervous to buy real estate 20 years ago. And then now, it's been how many years since you've been buying kind of actively?
Actively?
2017.
2017 you've been buying. Is there just been something changed for you mentally, or in just like the whole consciousness of your friends where everyone's more accepting, or is it something that's changed in you?
We were on our own path. We didn't have anyone that influenced in any fashion. And we're still on a path or a journey of enlightenment, and we're looking at all sorts of different opportunities to make ourselves, I guess, more comfortable in retirement.
So I guess, and what I'm trying to get to is, what was it? Like, I know you met Erika, but like usually to make a big decision like this about real estate, there's some frustration in your life, financials. Like, what was it that pushed you over the edge? I guess I don't get it. I'm always kind of interested with people who weren't in real estate and then decided to take the plunge.
I think what happened was that we realized we were overly invested in the commodities market, and we needed to divest ourselves. And real estate was the next obvious investment vehicle. And since then, we've gone into gold and the silver. So the retirement looks good. Looks real good.
Well, I think we'd always believed in real estate.
Oh, yeah, we always had.
Father had always believed in real estate. He'd bought shopping malls and in that type of investment, but we were just afraid to do it ourselves, is the truth of the matter. And I think also we'd both been through divorces, so you split up the assets and you start with nothing again. So then this real estate's another big risk. But when David heard the podcast, and then we came out and listened to the presentation, and we just gained a lot of confidence, like with all the supports that you had in place. I mean, we went home and we asked every single possible, listed every single negative thing that could happen. and I think one of your books suggested sort of just, okay, figure out the solution then. So we tried to plot out what the solutions were. I mean, I think it took us a little while, Erika, like to well, not once we did
At least a week.
Erika does a good job of getting people in motion. Oh, yeah, you're ready to buy? Okay, I'll show you the right properties. And I mean, and Erika does a great job of finding great properties, so she's really good at that. But it's interesting to see people take the plunge. They decide, they raise their hand saying, okay, we're ready to do something. And then the next day, Erika has you buying something. I mean that in the best possible way, by the way.
Well, it's true. Yeah.
But you're bringing up an important point. I think what we hear over time, and Erika, I'm sure you hear this all the time, are the reasons on why not to buy. Why not to buy in general? Why not to buy in St. Catharines? Why not to buy in Toronto? And I'm so happy you brought up that piece of the book, because I think it's so underutilized. People have these fears in their head. And we always say, hey, listen, whatever fear you have about real estate, write it down on a piece of paper. And next to that fear, how can you overcome it? So for example, sometimes people are scared tenants are going to damage their property. There are insurance companies now, if you want to pay, that will insure against damage by tenants. So you can kind of check that one off the list. A lot of people are scared the house will burn down. So you can get insurance for that. So we ask people just to kind of go through the list. And once you kind of go through the list, you realize, oh my gosh, it's maybe not that scary. So can you tell me more about it's your father who bought and the price he purchased some properties for?
My dad, back in 1952 or 1953, decided to buy a cottage, and he drove around. Not sure if my mom was included in the driving around, or if he just told her where he was going to buy the cottage because he was Italian. And he purchased 5 lots on a gorgeous lake, $200 a piece. So and thankfully, they're all still in the family. We're all blessed and lucky enough. Each of the kids has built a lovely cottage.
I can't believe he bought them for $200. And the thing that just like astonishes me about $200 a piece, I'm sure the day he bought them, he thought he got ripped off.
He probably did.
Like, I'm sure he said, I could have got those for $180. I should have paid $150. Like literally, he drove away there probably slightly pissed. Like he got the lots, but he was still pissed, because everyone we've ever met, Nick and I have this story of when I share that Nick tricked me into buying a student rental property for $250,000 because the closest comparable was like $220. And I'm like, Nick, you ripped us off like $30,000. And it actually didn't really bother me. The property paid for itself, but Nick is very frugal in that, like, I knew that would bother him. So as his brother, I have to throw these things at him to drive him crazy. That property has more than tripled now since, so it's kind of just this running joke that if you survive in real estate, even if you kind of screw up on the purchase, if you survive long enough, you're likely going to be fine. But at $200 a purchase, I'm sure he was fine. And were these lots just like land and then he built on them?
Yeah. Yes.
Okay.
And he was a builder, so it was perfect.
Yeah, got it. I like how you said he was Italian, so you don't know if he told your mother. Yeah, got it. Okay, so you buy these properties, and then Erika, where do you show them in St. Catharines? What's your game plan when you introduce somebody to St. Catharines? Do you just book some properties? Here are the numbers. How do you introduce St. Catharines? Because I don't think you were familiar with St. Catharines, correct?
No.
Yeah,
No.
so how do you go through that process?
I think that was at the north end only kind of time. It was before we started looking outside the north end, because the north end was still affordable. So we looked at all the nice houses and all the nice streets in the north end, and Dave went and made friends with the neighbor, had a few houses, had some teas.
Always knock on the door to your neighbor before you buy.
So what were you trying to do there?
Well, we had virtually moved in. This is the first house we were putting an offer on, and we were very emotional about it.
We didn't get it.
Which was a good thing, but we had met all the neighbors and got invited to tea.
I still remember that house. It's crazy the things you remember and the people, right? Anyways, yeah, I remember that house.
And then did you have a certain cash flow numbers that you were looking for? Like, what's the goal here? You're going to St. Catharines. Is it just give me cash flow, or just buy any rental property? Was it our strategy that we're using? Walk me through this in a little more detail.
Buy the nicest house in the worst or buy the worst house in the nicest neighborhood is what I wanted to say. And everything works out from that. We weren't chasing cash flow. We were looking for something that we could perhaps pass on to our kids. And we were going to make it work regardless.
And so these were straight rentals?
Yeah, they were initially single-family homes, but they went over and above in everything.
Pull
they
the
did.
mic a little closer to you, Erika. Thank
They
you.
went
Thank you.
over and above in everything they did. I mean, at that time, investors were spending 75, 80,000 on legal basement apartments, and
We spent more than that.
your budget was a lot more. But your purposeful budget was more than that. You intended to
It was a
make them nicer.
strategy that we had. We wanted to have the best tenants, and it's backfired in a small way in as much that we get a lot of churn because these are tenants. We have had a lot of professionals, dentists, accountants, people in the healthcare facility, managers of hotels, and their circumstance moves up and they move on. But that's allowed us then to keep the rental rates at market value,
Got it.
which has
Okay.
been really, really good for us in the last 3 or 4 years.
So the property in St. Catharines, you initially started as a single-family home rental?
Yeah.
And
No,
no.
we duplexed it right
Oh,
away.
you duplexed it right away?
Yeah.
Okay. And when you duplexed it in 2017, is that right?
Yeah.
What were the rents that you were getting for, or 2018? What were the rents that you were getting for top and bottom on that?
Oh boy, do you remember?
Ballpark it.
Like $1,250 and $850 type of thing.
Okay. $1,250 and $850.
Weren't that
Yeah.
Well, no, I don't think
12,
they were.
Come on.
1250 and 850. Oh, if that's what memory serves, that's fine. And then you, over the years when you had people leave, and you're saying it was a bit of a problem because you finished it so nicely, you attracted great tenants, but then the tenants kind of moved on in their financial lives and were able to afford more. But the positive in that was that you got a new tenant, you could go to market rent.
Right.
And then what are you renting 2018? So now we're 3-4 years later. What's rent about now?
Like upper 2050 and lower 1650.
Yeah. Wow.
Yeah.
Holy smokes.
And I wouldn't say it was a problem or it backfired. It just meant
No, it was good.
Dave had to do a little more work showing the property.
Yeah. No, but I hear where you're coming from because you don't have a tenant who's there like 10 years.
Yeah.
Right. In one of our rentals right now, I guess we have one tenant there is like it's a family for 7 years, and I don't see them leaving anytime soon.
But if you had that tenant there for 10 years or the 5 years, you wouldn't be getting
No.
Yeah.
2050.
The upside was that we're our own property managers, so we're not having to pay someone a month's rent to fill it again.
Yeah.
I'm doing it myself, and because we had 4 properties or 8 doors, we could mix and match. If someone didn't like one property, I would take them over to the next one because I knew someone's moving out shortly, and so we were able to fill them up pretty quickly.
Yeah, we did a lot of unique things, like had someone who really wanted the lower move into the upper for 3 months because it was available.
Yeah.
We were able to do that because we had
We
a
moved
number of
people.
properties.
Move people around a lot.
So what gave you the comfort to put that much money on the line? Because these renovations, Erika, the basement renovations that you're talking about, you usually see about $80,000
At that time.
At that time, now
it's
130, 150, 150,000 to properly finish.
For what they did, I mean, it would have been a lot more. I think you guys were over.
Because what's that? A kitchen, a bathroom,
Yeah.
and then finishing one,
legalizing as well.
legalizing
Yeah.
the whole unit. So you're
Like we typically completely gutted the basement and
the upstairs.
and the upstairs. Yeah, not often the bedrooms were okay, the upstairs, but
But I
we would
replaced
open
all
up.
the trim and doors and hardware and kitchens and bathrooms upstairs as well.
Okay.
We replaced 3 roofs. We replaced most of the furnaces, most of the ACs.
So what gave you the comfort to spend that much money? That's a lot of outgoing money. Because if you're buying multiple properties and you did this on each of your properties,
Yep.
this is a shitload of outgoing money.
We were looking at the long term.
Yeah. What got you to think on the long term? Like, because I think that's the correct answer for
I
sure.
think my dad, watching my dad and his experience with real estate, and I think also the fact that you had a background in construction,
Yeah.
gave us the faith in real estate and doing it right.
And then you've gone from not caring about cash flow, but now at these new rent amounts and the fact that you purchased these properties a few years ago now, you're cash flowing on these properties.
About $1,000 each.
$1,000 each.
Yeah.
Yeah. So you're cash flowing. So now you have the cash flow, you have equity built into to these.
Tons of equity.
Tons of equity because of everything that's happened. Okay, I have another question for you. How are you guys feeling about rent? And the reason I feel that way is I think sometimes as an investor, like you take all the risk, right? You buy this property, you qualify for the mortgage, you put up the down payment, you have to deal with changing interest rates. But part of me in the back of my head when I look at Canada right now, just with the way rents are going and they're so high, part of me always thinks, this isn't just a crazy amount of rent to be paying for tenants.
Yeah.
How do you, in your mind, because I don't know how to completely rationalize that. Like I've come at this whole business and real estate as an investor mindset. Like I'm going to take care of myself and my family. I've looked at the monetary system and decided hard assets are what I need to do for my family. And then you see rents going up, and part of me is like, holy smokes, like how are people affording these rents? What goes through your mind when I say that?
I always look back at the European experience. Not many people own homes in Europe. People are renting. So that becomes a fixed way of looking at your personal home. People are going to have to rent on a go-forward basis. Like up until recently, people always had the goal to own a home. I think that's slowly slipping away from the general population.
I agree. I think it's slipping away. I think it's this decade that is the major transition period. This decade, we see more and more people. And it's going to be interesting because I guess if anybody's 10 years old now, by the time they're 20, they're just going to be coming into this market and where are they going to rent? I don't think many 20-year-olds at the year 2030 are going to say, hey, where am I buying? So we're just in this transition period, and this is just the way it is.
Yeah. The white picket fence is no longer the norm.
Yeah, crazy.
It's there, you're just renting it.
Yeah.
Yeah. And you're right about Europe, because when I think of Carol's family in Europe, her grandfather in Florence owned property. I mean, who owns property in Florence? But, he owned property in Florence. But all her other cousins and stuff, they all rent. Nobody's going out, being born in Italy and Florence and saying, okay, I guess I'm going to be buying
Where's my villa?
Yeah, where is my loft in downtown Florence? Where's my Tuscan villa? It doesn't seem to happen. Okay, and then what? When you jumped into this, any unexpected things that you guys had to battle? I don't know, financing, repairs, tenant issues. Anything come to mind that was a curveball for you guys?
Stitches.
A few stitches. I did a lot of the work myself. I acted as my own general contractor. And there were a few stitches. I stopped counting when I got into double digits.
That you were doing the basements yourself?
Yeah, I was down on my hands and knees with a diamond cut, or diamond, what do you call it, where you smooth out the concrete.
Oh, yeah,
And
got it.
I couldn't see my hand in front of my face. I was just covered over. Nobody would do that. And I said, well, I'll do it. So.
Yeah, good for you. That's what it takes to get stuff done. You're making me. This past weekend, Carol and I were at just outside Western. My son's renting a student rental, and this student rental. I don't know how to say it politically correct. I don't know who's listening to this thing. The student rental, it could use a little bit of work, and we're used to owning the properties. So this is really weird for me. Like it's an almost out of body experience where my son's renting from somewhere else. I'm so used to being the landlord. I'm not used to being the parent of a son. And some stuff wasn't getting done fast enough. And Carol and I finally just said, okay, we're just going to do it. So we just got in there. We sanded some mildew off the shower. When in some student rentals, there's some mildew that builds up in the shower because they're not ventilating. We sanded off some of the mildew. We painted. We got mildew-resistant paint. The thicker mildew-resistant paint. I don't know if you guys know this paint. But anyway, mildew-resistant paint. Carol's in there painting. I'm in the furnace room vacuuming out like mice shit and cleaning and, just doing odds and ends around the house. And at one point, I'm on my hands and knees in this furnace area trying to get the shop vac to clean this area out. And one of my friends calls. And I'm like, if they only knew what I'm, what right now I'm in the basement of some London property that's, I don't know how old, behind kind of wedged between like a hot water tank and the wall with a shop vac trying to kind of like get all this like mice crap out of the way.
That would have been a good shirt picture with you wearing.
Yeah, totally. Yeah. I should have been wearing Our Life, Our Turns. Here we go. But you know what? That's kind of how you have to be. Like I found the landlord sent us a nice little email after saying, hey, thanks guys. I don't think he's used to parents like getting in there and doing this kind of stuff. But I think Nick has this too. And I think a bunch of people who are kind of rock star like yourselves, Erika, definitely like yourself as well. We all just kind of have that in us for some reason. You see something that needs to be done and you're just going to go get it done.
And we're still doing it for our tenants. I mean, I'm still looking for ways to improve their experience in our homes. And they really appreciate that.
How are you guys deciding on rent when you have a vacancy now? Erika, are you giving them guidance on just like going rates for properties, or are you just advertising it and giving a ballpark rent? How are you doing that on rents? Because rents are moving so fast. Because that's a big move from where you started to now.
Yeah. I always do research at the time, like
And so how are you doing that? Kijiji?
Yeah, Kijiji, Facebook. I did my last ones through Facebook. So proud of myself.
You guys are a really good mix of like Marianne's at the desk doing the paperwork and Dave's like, I'm just gonna go get bloody, like just to tell me what to do. So Dave does the the hands-on stuff. Marianne does the behind the scenes. So they're a really good kind of partnership in that way. And everything that you guys have done has been over the top in such a good way for your tenants, for your homes, for like everything you touch just kind of turned to gold because you put so much into it, so much effort and so much care.
Thank you.
We did have a learning experience from a tenant that we had to evict.
Walk us through that.
But they were so sad about it.
I know.
Like you guys took it so personally.
We
So
did.
you did, but that means you're good people.
So we knew, because we'd done the neighborly report, and we knew that they had a credit issue, but they, sold us their story. They'd moved here from down east. They were starting fresh, and they were working on things. And of course, we have to help them out was our mindset. But eventually it didn't work out. They just stopped paying rent after about 2 months.
So what process did you get? Did you go through the process yourself? Like N4, L1, did you hire somebody?
Kelly?
Yeah, Kelly was great. She really was. But it was a long, drawn-out process and a lot of missed opportunity in terms of cash flow.
Got it. Why was it long and drawn out? They were just kind of playing the system a little bit?
Yeah.
They
In what
clearly
way?
played the system.
Can you share anything that others can learn about? Or was it just showing up at the tenant board? Or Kelly handled it, so you're not sure?
No, we went
went.
actually for the experience, for the learning experience.
Oh, yeah. We're always on the learning curve.
Not that we wanted to have to do it again, but we thought we might as well know what to expect. What did
They didn't show up.
No, I guess it was our fault because at the beginning, we didn't file right away, because they gave us some excuse, like she was in the hospital and she had some relapse and this and that. And so, of course, we didn't act quickly enough. And, once we got the advice, we act more quickly under Kelly's direction. But what happened? What they did, they didn't actually show up to the court. And we were fully expecting that they would, I can't remember what she said.
Did the adjudicator offer a delay at that point? Or
No.
did they rule
No.
against them?
They did
Okay.
end up ruling against them, but she wasn't sure that would happen that way, but luckily it did.
They left midnight the day before the
Yeah.
sheriff was to arrive.
Oh, really? eh?
Yeah.
Midnight.
Have you guys ever had to hire a sheriff?
We did. We
Oh.
had him hired.
Okay, but he didn't have to show up.
Right.
Yeah.
Well, he did.
He did
show
show
up. He did
up
show, but they
because
were gone.
Yeah, we
Okay.
didn't realize it. We found out from the other tenants that they'd moved
Got
out
it.
in the middle of the night. We also found out from the other tenants that their son had shared with them that they would be moving soon, and they didn't exactly know when. But we didn't realize this. So they had inadvertently shared with the other tenants the plan. But the tenants didn't think anything of it. They didn't share it with us, right? So,
Oh my gosh, you give me flashbacks. When we first started this business, we would go with investors to the tenant board. So Nick and I would sit with the investor, and then we would speak on the investor's behalf. And then a few years later, it came out that you have to be a paralegal, or you can't property. But we were, for multiple occasions, we were going in there, and if the adjudicator said something, Nick and I would just say, "No, we got this," and we would jump up and answer the questions. It was completely ridiculous, but the whole time we shouldn't have been doing that, and we had no idea. We thought we were just offering help because our commitment was, "Hey, no matter what happens, we're going to help you through this whole process." Now we realize that we can't do that. So that's good that you guys went to the tenant board. It's so like the people's court. Like all the things that go on in the tenant board. I find it like free comedy because people get all in a
Yes.
huff
Oh,
over
yeah.
stuff, and you get like landlords who are clear. Some landlords are clearly in the wrong. There is no
Yeah.
doubt. It's
Yeah.
not always just the tenant, right? It's the landlord, and just going there and watching that whole thing go down is crazy. So great for you guys for going for that experience.
and then we just ended up deciding that when we help people, it's going to be separate from our business. So that was a big lesson learned for us.
Because you feel too gracious and too kind and buying into their stories.
Yeah.
Yeah.
Yeah. So we've helped our own personal friends since. One of Marianne's friends, I went and spent 3 weeks renovating her house, and I paid for all the materials, and my time was free. So
Yeah.
we want to give back.
Mm-hmm.
Cool.
She has cancer, so
You got it.
we wanted to
Okay.
make a nice environment for her.
Cool. What are some of your friends, what do they ask you about real estate now? What are their thoughts about what you're doing now? Because you've been in this now a few years. Does it come up, or do people just not want to talk about it?
Well, in the last 2 years, there hasn't been much dialogue, but there's not much discussion about it. We were at a party when we bought Preston.
Yeah, that's right.
We were at
A dinner party.
a dinner party with
We
about
had
10 people.
everybody on the speaker with Erika on the other side, helping us decide how much we should pay for this house.
And I was sitting in the parking lot at the brokerage office with their check in hand, ready. Here's the money. Just pick us.
And were your friends trying to talk you out of it when you hung up the phone? No, everybody was good
Not
with
by
it.
then. That was the fourth one. I think they realized we were pretty determined.
Got it. And then what's your strategy now? Do you refinance some of your rentals if possible? Do you let the equity sit there? I'm not sure how much you want to share and not share, but is that something that is on your mind?
Yeah, it is. Like we're not refinancing. We're letting the equity sit there because we're thinking now more about estate planning. So rather than growing what we have, we're pretty thrilled with what we have. And
Yeah, I think credit is your friend, for sure. But Marianne's not as convinced of that as I am.
And what do you mean by that?
Well, I think in today's economy, it's good to owe money, but only if your salary can keep up with the. So we don't.
whose salary?
Yours. Marianne's still working.
Yeah, I should retire at some point. We have to stop this game.
Yeah, got it. So you feel comfortable with it just because the debt in the world's growing. So you're thinking, okay, I'll just carry these properties. I'll carry the mortgages on them. It's funny. Every mortgage I think we've ever taken has seemed big at the time. And then a few years later, I feel like in the last few years especially, like look, since you guys bought these properties, I'm sure the mortgages seemed a little intimidating when you signed the paper. But now
Yeah.
it looks a lot less. Nick and I just refinanced one of our rentals. I was just sharing with a bunch of us. And no, sorry, didn't refinance, just renewed the mortgage. And we were offered a prime minus 1.2%. And so that's 1.25% interest on a rental property. Can you believe that? Yeah. And then that particular property, we haven't refinanced that property in like 10 years. And Nick and I sometimes get busy with stuff, and then you look at the mortgage statement, and you're like, oh my gosh, like this is just incredible what's left on the property and what the property's worth now. Time seems to fly. I must be turning into an old person because I just think like time's just going by so fast right now. What about your kids? Any involvement in the kids? Any interest? Any thinking on their part around this? Or do they just think you guys are crazy?
No, they actually support it. So the one daughter and her boyfriend, they each bought a condo. And when was it? Last year, in 2020, they decided to purchase a home together. And it was an investment property in Toronto, but they were purchasing this to live in. And the seller, I guess, had a lot of difficulty with the tenants. And the deal, closed, I guess, didn't close 2 times before they were the third purchaser. And they eventually got it, which was great. And they've kept both their condos as investment properties. So they've got the bug.
Yeah, cool.
And then Karen, they're looking at flipping.
Yeah.
So they've just, they bought a place in Toronto again a number of years ago, and they've done it up beautifully. And they're looking to flip it and move it up to the next level.
They got bought in 2018.
Yeah.
Yeah, and he's an electrician, and they've just done everything themselves there, and they're probably ready to flip next year.
Yeah.
It's fascinating that everybody seems to be pulled into the real estate market in some way, shape, or form. I look at that as a fault of our money system. Like, I don't actually think it's a good thing. But if you know it and you can get into it, it's the place to be. There's no doubt. It's just almost like I'm kind of torn sometimes. I'm like, this is great that we've all figured out that, not all, a bunch of us have figured out some real estate stuff. But at the same time, it's like, why do we have to figure out this real estate stuff? Why can't you just do whatever you want in life and not have to worry about it? But it's one of the few ways to kind of pull yourself ahead financially. Erika, are you seeing any changes in anyone that you're working with over the years on what people are asking from you as real estate? Like, is cash flow still, usually it's cash flow. People want to quit their jobs and it's cash flow. Is that stayed consistent through the whole time over the last few years that you've been working with investors?
For sure. Yep. Cash flow. This past year, there's been a lot of people selling that bought at the same time as Dave and Marianne. So, they bought in the 300-400s and are selling in the 7, so they're obviously very happy and either reinvesting that money into real estate or doing something else, but just kind of happy with that gain. But new purchases are cash flow for sure, and then equity building, of course.
And then how do you think about cash flow? Because I think ever since we've started this whole business, everyone has said cash flow is debt, right? Like in 2009, because we started with, you're not going to believe this, but like Hamilton, I'll never forget this. It was my old neighbor from Mississauga. He bought a semi-detached 4-level backsplit on the Hamilton Mountain for $195,000. And he looked at me. I hope he's listening to this. He looked at me and thought he got ripped off. For sure thought he got ripped off. Didn't want to buy it. Bought another house, I'll never forget, up in Barrie, because he was told Barrie was the better investment. And the Hamilton place was great. And we were buying fully detached at like $205,000 at that time. Which was crazy. Nick and I look at each other. We're like, why did we not have more money ourselves? Like why did we just not help anybody and just buy a street of homes? But we couldn't. Like, you just can't, right? But looking at those prices then, but going back to what you were saying, Erika, so cash flow, how do you have a kind of like a way you're talking about cash flow now? Because I feel like people must be approaching you saying, cash flow is not really possible anymore.
Well, I've kind of made the shift to short-term rentals. So I've been buying cottages myself up north and selling off rentals down south at top dollar and buying up north at less than top dollar and doing short-term rentals. So I kind of answer that question with there's other options. You kind of have to stay ahead of the curve, right? Like, I mean, we started in St Catharines with Mike here, and then I led that expertise to my clients too. So lots of people have made a ton of money in St Catharines, but I mean, there's still a lot of boom. There's a lot of room to boom, I say, in St. Catharines and Niagara. But I mean, there's more in markets that are less.
So
now.
where are you doing? Can you give us ballpark on how does the short-term rental structured? What's the purchase price roughly? How are you doing that?
So I'm up near Bancroft, and I've bought 4 places now. So basically, the numbers are high. I mean, we bought one last week, and it was listed at $750. We paid $815 on a bully offer, not in competition, just a straight-up bully. So that's crazy. I mean, like we wouldn't buy a rental in Southern Ontario for $815, but the rental market, it's only a 3-season cottage, and we're going to rent it for $4,900 a week for 16 to 20 weeks next summer. Some weeks are already pre-booked. The long weekend is $700 a night for the Labor Day weekend. So I mean, the cash flow is amazing. I mean, mortgage rates right now, as you said, are basically free money. What could go wrong?
4,900, yeah. What could go wrong? Yeah. $4,900 a week, and that's just people renting it with their family, and they want to go up there, and you can get that for how many months?
May till, I mean, I'm literally making it up as I go.
Yeah.
So I think May till September.
Yeah.
5 months.
Wow.
Yeah.
I feel like that's relatively new where people are paying that much.
I mean, it's somewhat COVID related, but if you think about the people that didn't travel before COVID, then there's the people that traveled during COVID but won't travel for years to come because of COVID. And then there's the people that have always traveled and they still like cottages. So you're kind of targeting 3 different groups of travelers. So I think the COVID effect on cottaging is going to last for 5 years.
Yeah, and I think there's just a change. I mean, Nick and I bought that place up in Blue Mountain, and we bought it as like a 12-month around the year kind of vacation home, like a second kind of home for both families to share. But so many people in that community that we bought there are moving there. Some from Oakville that we know that happen to be on our street where we live right now are selling, and they're moving there permanently. Carol's sister is leaving Maple, Ontario, so just north of kind of Canada's Wonderland area, and moving up to Blue Mountain permanently. So I think there's also just a shift.
There's a ton of shift for sure.
And it's driving up the property prices. And I think people are just deciding to live a little bit. So if they can't travel outside of Canada, they're just saying, I got to do something.
Yeah.
Everyone's a little cooped up.
Yeah. One of the cabins I bought is not waterfront. It's literally 2 cabins on 5 acres. And I rent them both for $150 a night. And they're booked straight till the end of September, and they're just cabins in the woods. Like, one's an old schoolhouse that people are like, oh, we love it. Like, yeah, they just want to get out of the city and not see people and not see traffic.
And so then no one's managing these for you. You manage this stuff. You advertise them on what platform to get tenants? Airbnb. So they're Airbnb properties.
Yeah. And Facebook. There's a couple really good cottage Facebook groups that you post them and they're booked like in pretty quick.
And the turnover, you're going and doing the turnover. Is it a lot to do?
I mean, the big cottages will be weekly turnovers. The smaller ones I'm doing 1 night minimums. I was doing 3, but I found that if you allow pets and you allow shorter term, like 1 or 2 nights, then they rent faster for more money because people can't often get 3 nights away from work. So the more accommodating you are with pets and time, then people will book faster and pay more. And then on top of that, you're getting a cleaning fee of $150 to $200. And the whole COVID thing, right? The stringent cleaning is more expensive, so people are paying $200 for a cleaning fee on a one-night rental.
Wow. So you think this is a trend that's obviously going to continue? You seem bullish on this.
I hope so. I mean, you got to do something different. When everyone else, that face that you make when you're like, really, Welland? Remember that face?
When Erika first started with us and she told us that she was helping people buy in Welland, I'm like, really? We're helping people buy in Welland?
So whenever I
but
see
now,
that face,
now it's completely wrong. I was completely wrong. Obviously, I was wrong.
I had that face with St Catharines. Like when I started investing with Rockstar with Mike, I went to another group in Burlington, and a prominent realtor in the area was like, really, St. Catharines? And now he's trying to open a brokerage in St. Catharines. Funny how that works, right? So
yeah, Niagara's exploding. There's no doubt. Okay, so that's cool. So Airbnb, and that's something you're going to try and continue. How's financing on those properties? Tricky?
Yeah, it's not awesome. I mean, it's 65% loan to value sometimes. The key is like buying a 4-season cottage that has heating and water. Like you don't want to be baseboard heating and like water.
So those ones that are baseboard heating, because you said you had a couple that are just like cabins in the woods, the financing on that non-existent or?
It's between 50 and 65% loan to value, so you're putting down more for sure.
Okay. And through regular mortgage brokers will get it done, but you're putting down.
That's a B lender. I didn't want the B lender for that one. And I've also bought them through the corporation, so I've gone B lending on them. But I mean, I have a couple clients that have kind of gotten the cottage idea.
And then interest rates on that, are best rate, or are you paying a little bit more on the interest rate?
3-4% on the Bs, so not terrible. I mean,
no, for a B lender, 3 to 4%.
No, not terrible at all. I mean, you pay the lender fee, which is what it is with the B lender, but some clients are able to get like the traditional, 75-80% mortgage on like if you're buying a house on a lake, it's not really a cottage, right? Like, so I mean, at that point, it's just loan to value is higher. And as lenders get to, experience the higher, like Muskoka, Halliburton, those areas are getting 75% loan to value. But the more northern areas, as there's more exposure, then lenders will start lending, I think, at higher rates too, right? So we just kind of have to push it like we did in Niagara.
Yeah, as they feel the risk is coming down, they'll change their lending criteria.
Once they see that the rental market is booming, I think the lenders will come around to it as well. So
I wonder what you guys could rent it. When your father bought those properties for $200, he probably splurged and built a house for, $1,000 or whatever it was. Probably went crazy, spent like $1,000 building the place. When you hear Erika say $850,000, your father spent like $1,250. I'm just making that up, by the way. We don't know that he spent $1,250 total on this thing, but can you imagine?
He probably did, because he brought his construction guys up for the weekend and said, build the car.
Wow, that's crazy. So you guys are selling one. Oh, sorry, David.
I was just going to say, we used to rent many years ago.
The cottage, yeah.
And now you use it, so forget it.
Yeah, I just heard someone down the street's getting $3,000 a month, but it's a smaller cottage. And
it was funny because, was it 2 years ago or 3 years ago, our daughter and boyfriend went on a trip in the States and Dave decided that weekend, we're gutting it. We're just redoing everything. We've got all our little extras from St.
He's looking for more stitches. Yeah, he's like, I already have some stitches. I'll just get some more stitches.
And then she phones us and says, we're getting married. And we're getting married at the cottage
no,
in 5 months. So that was good.
We renovated it top to bottom.
Yeah, and did you get it done in 5 months?
No.
Well, you got the kitchen done and the main room done. You didn't get all the second bathroom and bedroom done.
So in St. Catharines, we bought 8 kitchens from IKEA with all the appliances, and you only buy them when they have the kitchen event, and you get a 20% coupon for future purchases. So I saved all these over the years, and when I did the cottage, I hooked up with my IKEA rep. We were getting pretty friendly by then, and I did the cottage plan, and he said, "Okay, Dave, that'll be $13,600 and whatever." And so I kept giving him all these cards, and he said, "Okay, that's $6.85."
See the benefits of putting your own kitchens, your own properties. So wait a second, you bought all these IKEA kitchens. You put these kitchens together yourself?
In the
I bought labor, yeah.
You bought the IKEA.
No, I had a laborer that worked with me the whole duration.
Okay, I was gonna say, holy smokes, man! I can barely put together. I just did my son's IKEA desk at Western there to put together a kitchen. That would kind of freak me right out. I'm horrible with that stuff. Nick's way better. Erika, I don't know how you are, but when it comes to that kind of stuff, at this point, I'm like, please, can I hire somebody?
I'm good at hiring contractors.
Yeah. So full credit to you. See, that's the benefit. You spent all the money on the rental properties, and you got these gift cards.
Literally blood, sweat, and tears. Were there tears?
And a lot of other finishes are St. Catharines finishes. Like every property in St. Catharines, they look identical. We just had a good formula, and now our cottage looks a lot like that too.
It's funny. It's funny how some
With
leftover
a few
paint.
upgrades.
Yeah, cool. So you're selling one property for estate planning purposes. So if I'm understanding that property properly, you're going to take some cash and then use that cash to restructure some things in your lives. And then the other properties, any plans for those? Is that stuff, I guess, just where are you at mentally with that? Is that stuff you'll just keep forever, or will you sell like Erika's saying and do something else?
I think we haven't really decided. We're keeping them for now. We want to sell
Erika,
the one.
they want one of your cottage rentals.
Yeah, we're lucky enough that we have those properties and they've done really well and they're cash flowing, and we'll just. I mean, who knows what's going to happen in the future? Like we still have a lot in equities. So we've got equities, we've got a lot in gold and silver, and we've got the properties. So when I retire, just depending on world circumstances, we'll decide where we draw the money from.
Yeah, cool. So that's a nice position to be in. So you can choose if you want to sell one. And we see more rockstar investors. We have investors now that have been working with 10 years. Erika, you have a ton of people that have been working with for a long time now. And it's kind of nice to be able to sell an asset when you need the cash to get that hit of money, except for the capital gains tax. I don't know if you guys have ever made the capital gains tax from a property sale yet, but that absolutely hurts. My brother-in-law made me, I hope he's listening to this too, made me sell one of our student rentals that we own together at York University. And we bought that thing for $350. It was a 4-level house. So 3 levels upstairs, 7-bedroom, properly laid out student rental with an IKEA kitchen in the basement, walkout. And there was one mouse in the house. It freaked out one of the girls that were in the basement. And that was the straw that broke the camel's back. Mario was like, so we're going to sell this property. We can't handle this property. And we sold that as family. So, we kind of decided to sell that property. We sold it. And I'll never forget writing that check for the capital gains tax. That just hurt me. Like it hurt me. So now we tell anybody, if at all possible, refinance. And I'm not saying don't sell. You're going to sell one, that's fine. We've done it as well. But it just hurts when you write that capital gains tax.
It's a mindset. I mean, if you're paying taxes, you're making money.
Exactly.
Okay, I had a good friend of mine, and back in the dot bomb, he was mortgaging his house to buy all these shares, and he was telling me how well he was doing. And when it started to slide, he was reluctant to sell because of the taxes. He lost his house.
Oh, geez.
If you're paying taxes, you're making money.
Yeah. Yeah, we tell everyone the same thing. It always baffles me when someone will come to us. Eric, I'm sure you get this as well. Well, someone's like, well, you haven't taken into account taxes when you show me these numbers. And we're like, well, yeah, everybody has to pay taxes. Get a good accountant. There's usually efficiencies. They can kind of make it work and minimize using depreciation. Maybe it's right for you, maybe it's not, but all these different things. But everybody thinks like if you're paying taxes, it's this bad thing. But I'm like, if you're paying taxes, it usually means you're in the profit situation. So you're making money, right? So yeah, David, we're the same way with that.
We won't sell another house until Marianne retires, because that'll mitigate taxes, having said what I did earlier. But yeah, we have a plan. There's a plan.
A rough plan.
Yeah.
So looking back, if you go back to yourselves, when... which daughter was going to Mac that you
Laura.
didn't buy the student? It was Laura, and you didn't buy the student rental when she went to Mac. What would you tell yourselves now in that situation?
Idiot.
Yeah.
Oh no! But what fear did you have then that didn't come true? What was it? No, but you said it was the resources that weren't in place.
Well, part of it was that, and we probably could have stretched, but just didn't have the confidence. It was really being surrounded by the Rockstar team and the resources of the Rockstar team that gave us the confidence. When we were contemplating it, who do you turn to? You turn to your friends, right? And none of our friends have gone down this path. So they all, presented all of the potential negatives. And we hadn't read your book, so I didn't know about making the list. So it was just the circumstances. We weren't traveling in the right circles to make the right decision.
You weren't getting that scrunchy face.
Yeah, I was looking at them like, what are you doing? So someone listening to this today who's kind of on the fence, what would you kind of tell them? What if they're thinking about it? What I tell people is a lot of people are looking for like 100% of the knowledge. They're like, I'm not going to do this until I feel 100% comfortable. And I tell everyone, listen, if you can get yourself to 80%, it's a miracle. The last 20% is a leap of faith, and make that leap with the right people around you. So the way Erika had your back and was able to bring this in surround yourselves with the right people and make the leap. Otherwise, you're just never going to take action, and life is short.
You get the knowledge by just doing it. Yes. You got to get in the game. And we learned so much now. We could be a coach now.
Yeah, you totally can. Yeah, cool. Erika, anything else that you wanted to share?
Not really. I mean,
how much you enjoyed working with us?
Yeah.
Anything at all?
I think I already said how awesome you guys were. I mean, you and I think have the same mentality in a lot of things. Like Dave and I, just do it. Like, what could go wrong, right? And then Marianne was like, well, here are all the numbers. You guys are on the right track. Like,
she's a CA.
Here's the evidence to support that you're making right decisions. So, yeah, and that's a good partnership for sure. Like, you need the balance, right? I mean, if we had two Daves running around, you don't have to St. Catharines by now.
You should see her spreadsheets.
They're beautiful.
Unbelievable.
Yeah, I know. We've dealt with so many people with the spreadsheets, and I'm just so not the spreadsheet guy. I'm always like, let's just take some action. I'll figure this out. It looks good to me. What's the mortgage? This is how I do it. I'm like, what's the mortgage carrying cost? Oh, yeah, like roll in some more expenses, property taxes. What's the rent? We're good to go. We are good to go.
I have my Marianne. You have your mom.
Yeah, our mom. I have Nick. Tom, let's look at these numbers one more time.
Marianne did it in a way, though, that wasn't
paralyzing.
Yes, exactly. Right. It was like you were very open-minded. You're like, well, let's just have the numbers to support. Like, you were moving in the same direction. You guys were moving in that direction together. So that's easier than when you have an investor that's like, well, look, it's negative $42. I'm like, well, you have like every possible thing. Like, the shoes that you're going to wear to go to the property is in your spreadsheet. Like, so but you had very
when you talk about cash
smart
flow,
way of looking at it.
Everything's in that spreadsheet. So the cash flow is a true money in your pocket
representation of what's actually happening.
But that kills it for a lot of people, though, when they look at overanalyze, right? Like, every little thing has to be in there. Like, I think you considered like the big picture, and you guys knew that you were maybe overspending on your renos, but you knew that yours was a long-term game. Like, you weren't flipping it. You didn't know St. Catharines was going to double in 2 years. I mean, no one really knew that. I mean, we had a good idea that it was going to keep booming. But it was a mix of like right timing. You heard the right words at the right time. Like, going back to your questions at the beginning, I think that people have to be in the right mindset. I mean, we meet investors all the time that are like, 5 years later, they are still contemplating the property, but these guys were ready to hear what Rockstar was saying, right? Like, they just kind of jumped in and embraced it and made the connections and, build your dream team, and you just like went with it.
And I think we expected to be here, but not for 10 or 15 years. We weren't expecting the
good for you guys. Congrats on that. Seriously. That's a good. And I think, Erika, to kind of just echo everything you're saying, I think most people underestimate the value of taking action, David, what you're saying as well, because you need the mistakes from taking action to learn from. Like, everyone will show me a spreadsheet, and then they will never take into account any appreciation, right? So they'll just show me the cash flow numbers and say, oh my gosh, and they'll never take into account, well, map out 5 years from now, what's this property going to be worth? Take any appreciation number you want. Does that factor into any decision? On top of that, where are rents going? And if you don't take action, you can't make better decisions in life, because you need mistakes to guide your next decision. Like, if you're trying to be perfect at all times, you'll never act. You need to mess up. Yeah. One of our best business mentors ever said, you need chaos. Yeah. If you don't have chaos, going to IKEA and getting all these things, and your truck's a mess and your desk is a mess, it means you're not doing enough, because you need the mistakes from all this effort in life.
I like when people look at you and they're like, how do you do it? I'm like, I think my life's pretty normal, but apparently it's not.
Well, but just from watching you, Erika, you'll just go and do stuff, and you'll learn. And then some of the stuff that you're doing, you'll learn that, okay, I don't like that. and you'll adjust and you'll sell some St. Catharines properties and move
Yeah.
into these other things. You'll just constantly move.
Accepting chaos for type A's, like I think everyone at this table, is you have to accept the chaos, that's your norm. Because I always try and get things to be calm and stable, and I get there, I'm like, this is boring. Let's do something. Let's blow it up. Let's make it chaotic again.
You got to remember there are 3 streams of income when you buy a piece of property. There's the people that are paying down the mortgage, there's the appreciation, and then there's the true cash flow. So it's a win-win-win.
Yeah, it's so hard to get people to realize that. Well said. Yeah, thank you.
So
because
wise.
everyone will just, yes, you're wise beyond your years, David. Yeah. Cool. Guys, thanks so much for doing this. We're not going to share a website or a Twitter handle or anything because you guys aren't on social media, which is amazing. Congratulations. You win life. You win life. You win. Yeah, it's your life on your terms for sure. Erika, thanks for jumping. I know you're busy, so thanks for jumping in on this. Really appreciate this. Thank you. Thank you.
Pleasure.
Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Term show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.